Welcome to XM.com. I'm Cristina Marujos, and this is the Daily Market Comment by Raf Boyadjian. With yesterday's Treasury auction passing uneventfully, investors have turned their attention to the latest reading of the Consumer Price Index out of the United States later today. Expectations of a spike in U.S. inflation have been running high for some time now, and markets are likely to get the first taste of actual inflation shooting above the Fed's 2% target at 1:30 GMT. America's headline inflation rate is projected to have surged to a more than one-year high of 2.5% in March. However, inflation expectations have stabilized lately as the Fed appears to have calmed market fears of inflation spiraling out of control. Nevertheless, markets are likely to be sensitive to a bigger than expected jump in CPI, especially if strong inflation numbers are followed up by robust retail sales figures on Thursday. There was some relief, however, ahead of the key data releases, as Monday's auctions of U.S. government bonds was met with sufficient demand. But the 10-year yield was edging higher today, giving the dollar a nudge up. The Greenback has been seesawing in recent sessions, while the euro has been trading in a tight range. The euro's unusual resistance against the U.S. dollar is being driven by some doubts about the European Central Bank's commitment to keep Eurozone yields low, as well as signs that the EU's troubled vaccination campaign is finally gathering speed. The UK's vaccination program, on the other hand, has suffered a setback, and this has been quite a drag on the pound. However, it's been a positive start to the week so far for sterling, as non-essential businesses in England and Wales reopened this week, and the monthly GDP print released today showed the UK economy grew slightly in February. Gold, meanwhile, remained on the back foot as it headed for a third straight day of losses. The precious metal could get a boost if U.S. inflation beats expectations. The mixed mood was also evident in equity markets, where on top of the inflation angst, the start of the Q1 earnings season is also making some traders nervous. The S&P 500 held near record highs on Monday, but E-mini futures indicated another lackluster session for Wall Street today. That could easily change in the coming hours, though, if the U.S. data sparks volatility in bond markets and as the earnings results start to come in. Thank you for watching today's Daily Market Comment here at XM.com.